Hello, I'm David Cash, and today I will be walking you through how to fill out a census request. About 2 weeks before the end of every plan year, we'll be sending out a census request for the current year so that you and your payroll people can complete that soon after your final payroll of the plan year. The census has 4 tabs in an Excel spreadsheet. The first tab is the instruction tab, which goes through and explains the other 3 tabs. For ease of use, I will skip the instruction tab and just go on to the second tab. The second tab is labeled Annual Update. On that tab, we would like you to fill in the name of the company, address, telephone number, fax number, and email address, as well as the plan trustees and any owner-officer information. The owner-officer information also includes anyone that is related to a 5% or more owner that is an employee of the company and therefore receives pay from the company as an employee. Because many of these people are considered to own the same ownership as the owner does, we need this information to accurately determine who is classified as a highly compensated employee per the IRS and Department of Labor regulations. We also have a section in here that asks your fidelity bond coverage. An ERISA fidelity bond is required by the Department of Labor for all plans other than solo participant plans. This coverage can be obtained through most insurance companies. The Department of Labor does publish a list that we would be happy to get to you if you request that of us, of the companies authorized to issue those fidelity bonds. On this, we ask for the name of the company as well as the coverage amount. The next section in the annual update is asking about any non-safe harbor matching contributions. If your plan is a safe harbor plan, we know what the percentages are, we know what the calculations are because of the safe harbor notice that you have to distribute to each of your participants 30 days before each plan year. But for discretionary matching or even discretionary profit sharing contributions, those amounts can change every year generally, and so we need that information in order to recalculate what those matches are and also what the profit sharing amount is. And we ask that you include that on the census so we can help in double checking the calculations and make sure that everything is okay, just in case there's any IRS or Department of Labor scrutiny on this. The next is a list of general questions. Whether employees fail to make timely loan payments, and whether all deferral contributions were remitted in a timely manner. Those 2 questions basically go off each other. The Department of Labor has established a safe harbor time frame for depositing employee deferrals, which are their contributions as well as any required loan payments. The Department of Labor will allow small plans 7 business days from the paycheck date to put that money into the trust account at the record keeper, whoever is the custodian of your plan's assets. Large plans have a much more nebulous requirement where they have to be deposited as soon as the funds can be segregated from the rest of the funds of the business. Generally, this is somewhere between 2 and 5 days, depending on the auditor or investigator that may be looking at your tax returns. So the sooner you make those deposits, the better it is. The next question has to do with whether or not you have an ERISA fidelity bond in place. And the following question is, has the trustee of the plan changed? Then the next 3 questions talks about if the plan has been amended during the year, if you changed your financial advisor, and whether or not you use lease services during the year. Leased employees oftentimes are the responsibility of the company leasing those employees and may very well be a part of your retirement plan. Most of these questions are asked just to make sure that you as well as us are on the same page as who is eligible to be in your plan and the plan is operating as it should be. The next tab is the actual census tab. On here you can see that we've listed a sample employee, John Doe. We've treated this as if your plan allows 1 year of service with 1,000 hours worked before plan entry. And so in this example, John Doe was hired on February 1st, 2015. And if this was a sample census for the 2016 plan year, then 1 year of service from February 1st, 2015 would go until January 31st, 2016. And then if we have a semi-annual entry date where entry is only on July 1 and January 1 of a given year, then John Doe would enter your plan on July 1, 2016, since he met the eligibility requirements as of January 31st, 2016. As such, you can see that his first 1,000 hours worked during the year, as well as his first $40,000 of pay, are in the pre-entry column. The pre-entry column is only for the initial year of a participant's eligibility. Every other year, John Doe's compensation would be for the entire year. But since he entered the plan on July 1, 2016, and most plans that we set up only count compensation from plan entry date, his first 6 months of the year would not be considered compensation for entry into the plan. You do need to know that information though in helping us determine whether or not he has the compensation necessary to be considered a highly compensated employee, which currently is anyone that makes $120,000 or more in a plan year. And then you'll see in columns M and N is the eligible hours worked during the year and the eligible gross pay. For John Doe, that would only be his pay and the hours worked from July 1, 2016 through December 31st, 2016. We've shown what would happen if he had $18,000 of pre-tax deferrals, and then we calculated what his match would be if you were using a 4%, if you were matching 100% of deferrals up to the first 4% compensation. As you can see, we also have a second line on here which shows an employee who has been employed for a few years and has been in the plan, and so nothing is entered on the pre-entry columns of this worksheet. The final tab, or the fourth tab, is the contributions receivable tab. As it states at the bottom, this is only to be used for deposits that are made after the end of the plan year for the current plan year. And so if we're working on a 2016 plan year, then this would be any contributions that were deposited that showed as recorded by your custodian after 12/31/16 for a compensation that was paid during 2016. For instance, if your final payroll is December 28th of 2016 and that doesn't get deposited to your custodian until January 3rd, 2017, we would want you to list that amount on this fourth tab so that we know that there are some amounts that are on the third tab, on the census tab, that haven't been deposited yet. And that helps us to reconcile what your expectations are with the numbers that we see, not only from the census, but also from the reports that we download from your custodian. If all of the deposits are made and recorded during the year, say your final payroll is December 20th, and that gets deposited by December 27th, then we would expect this fourth tab to be blank because you will have deposited all of the monies that are required to be deposited for that 2016 plan year. If you have any questions on the census or how to complete it, please contact us. You can either ask for Debbie Brown or you can ask for David Cash. And the number here at the Salt Lake City office is 801-467-4450. In the Logan office, you can ask for Shane Roberts. The number there is 435-750-5566. Thank you.